This is our Forex blog post for January 13th, 2011. And as we always say, one of the best ways of trading is to simply trade the strongest currencies versus the weakest currencies. There's really nothing else to it. And today, the dollar's weekly trend had shifted down last night or yesterday, and we had a little bit of weakness here and at 4, and you can see that led to a continuation. At 7 o'clock, the dollar became super weak and stayed weak for a very long time. One of the stronger ones at that time were the euro. At 7 o'clock, you can see the Australian wasn't that strong. This one was strong, but the weekly and monthly trend was down. It's always best to trade a currency that's strong in real time, that has a weekly trend that matches that strength, versus another one where the real-time weakness is there and the weekly weakness is there. So at 7 o'clock, you're looking to buy the very strong euro versus very weak dollar. It's that simple. Here's the chart, and you can see the fib level acted as major resistance. Anytime a resistance area gets hit once, twice, and you don't get a pullback off of it, the third time it hits is very likely to go through. This is one of the systems that we teach, and you can see at 7 o'clock right here, the market was super strong. It had already broken above the fibs, and you might have even went long here or waited for this sideways breakout and went long right here at 31.80. And you can see our software, which showed you at 7 o'clock way back here, this was one of the ones most likely to go up. Within 45 minutes, the real breakout happened, and you can see this went up 180 pips or so. And anytime it's above the upper containment band, it's likely to stall. So you might have got out of half your trade here, trailed your stop. I probably would have got out of my whole trade up here. I wouldn't have expected this to continue up another 70 pips. And normally we buy pullbacks after we see extreme strength like this, but when it's this far above the upper containment band, I don't break that rule, because usually you're going to lose money up there. In today's example, the trend continued. Now, not only was the dollar weak, but it's starting at 6, the yen was weak as well. And so, at 7, when the euro really took off, you could have also bought the very strong euro versus a weak yen. And notice 7 o'clock right here, it took it about 45 minutes to an hour to break out. And earlier today, this fib level here, these act as support resistance. Once it breaks from underneath above this, it tends to act as support. The weekly trend is up. Unfortunately, the monthly trend is down, but we don't pay much attention to the monthly trend. Our intraday patterns and strategies tend to, most of the time, trade in the direction of the weekly trend. So when this pulled back right here and there wasn't that much weakness, you might have bought and had a little scalp, got in this trade right here as well, because it acted as support. And you can see that pullback here actually had green. The euro yen was falling, and what this is telling you is the euro wasn't falling against other currencies, and the yen wasn't getting stronger versus other currencies. So that's a very high probability double bottom right here at a major support level. And so some people might have been in this trade 50 pips early, but 7 o'clock it also showed up as extreme strength in the euro, and here's a fib target that might act as resistance. And the market just trended up. It went up over 100 pips from that breakout. And again, anytime it's above the upper containment band, this is not the normal case. Normally when they hit the upper containment bands, you get reversals, but that's why you want to trail your stop. Sometimes you end up making 50 and sometimes 150, 200 pips more than you anticipate. So if you want to get out of half your trade when the market kind of stalls, and then trail your second half using our trailing stop techniques. Another one that was super strong earlier in the day was the New Zealand currency right here, and during that phase from 1 to 7, we had a little bit of weakness in the dollar for about a half an hour. Then there's a little bit of strength, but nonetheless, because the weekly monthly trend's up in New Zealand and the dollar's weekly trend is down, you still could look for buys in the New Zealand dollar at 1. It's not the perfect scenario because once you see some strength in this one, the stronger of the two strong currencies is still going to cause the direction. So here's 1 o'clock. You can see it kind of went sideways. I wouldn't have bought this myself because you have this fib level right here, and there's all this resistance selling areas above. We have the previous week's high, 10-day moving average, previous day's high, and this fib level. But once it broke above here and came down and didn't, a lot of times resistance once broken becomes support. I would have bought this breakout right here, and you always want to draw your fibs off the last wave. Oops. and here's your first and second fib target. I probably would have got out of the entire trade here at 75, and it's really a judgment call whether you buy little pullbacks that are right at or near the upper containment band. If you see that explosive trend up having plus 20 strength like this is our trend explosion system in a perfect example. The daily, weekly, monthly trends up, it pulls back, it's just right near the upper containment band. I almost never break the rule of buying currencies 20, 30 pips above the upper containment band, but when they're right at or maybe 5 or 10 pips above it, usually you can get away with that. So you bought this, came up a little bit, ran out of steam, you can see it wasn't that much strength, pulled back again, didn't break this low right here, so you might have got into the trade again and got out of that trade here. So not only did you have a nice 30 pip move on the first trade, you might have had a 15 pip move here, 15 pip move here. And a little later in the day, we have an Elliott two-wave pullback. This nice little fib right here came down to the fib targets. You can see it didn't have that much weakness at the time. You get long, and you might not have stayed in this move up. It moved up another 20 pips. You probably would have made only 5 or 10 pips on that trade, but it is a good example of the Elliott two-wave pullback, which in my experience in trading it has a very high win percentage. It doesn't always give you 20, 30, 50 pip moves, but most of the time you're going to have a break even or a small win at the worst case scenario. Now the Swiss was quite weak last night from midnight till about 4:30. So we don't normally trade the New Zealand Swiss, but this is a good example of a currency that you could have traded. Let's put that on here. This is not one that most of us trade much. However, if one currency is super strong and the other one's weak, you can usually find some big moves. Now here's 12 o'clock to 1 o'clock. It's above the hourly. All the time frame trends are up, and you can see you might have had a small win here. And then when it finally took off, it went up from around 85 all the way up to 44. So that's a 50 pip move using our currency meter. And this is one of the reasons why I oftentimes recommend traders, if you want to get the software free by opening an account at FXDD, FXCM, Forex.com, or Apari and get the e-signal data free as well, it's always in your best interest to open another account at either Dukas Copy or MB Trading, which have very low spreads. It's an ECN type deal. They don't pay for the data, and we don't have a free deal with them. But if you have FXDD, Forex.com, Apari, and FXCM accounts, you get the software and the data free, you can do trades like this in the New Zealand Swiss, pound yen, any of the wider spread currencies or ones that the retail platforms may not even have, and catch these, when the opportunities are there, catch these moves and pick up 30 to 50 pips. Remember, 10 pips per day using very low leverage. If you do that every day, you can double your account in 2 months. So, a move like this is an entire week's minimum profit goal. So be aware of that. When you use our currency meter to spot the incredible trades, use that. I'm just going to quickly go through the currencies. We already did the euro dollar. Pound dollar was above the hourly and exploded up yesterday. Very strong. We have the monthly pivot, previous week's high, and it's in this chop zone right here. Once it breaks above here, because the longer term trend's up, it's a pretty decent trade. And here's our Fibonacci profit target, which pretty much nailed the price. This one wasn't as strong as the euro dollar, so you might have got out of the trade, somewhere up here, right near there. I would have probably exited right here with the trend reversal sell signals. Dollar Swiss, the weekly and monthly trend had shifted up. Because of that, you might not have looked to sell here. We have this fib level right here, which again, once broken, tends to be a very positive sign, and the market is very likely to go up. You could have bought this breakout right here. This area is 25 pips away. Take any trade in the direction of the weekly trend, and especially when the monthly trend confirms it, where your next profit target is 1.5 to 2 times what your risk is. So in this case, most of our trades were going to risk 10 pips, and likely profit target's 25 pips away. And half the time the market doesn't go to the profit target, and you end up either losing money or making a very small profit, and other times it goes through it. So when it hit the upper containment band here and kind of ran out of steam, you might have got out of that trade. We have a nice little wedge pattern right here, trend explosion system here. Anytime you have plus 20 strength, usually a trend continues. Again, like I say, above the upper containment band, expect reversals, and this went up about 20 pips. There wasn't as much strength here, and it exploded down. Now, because the weekly and monthly trend was up, you might not have wanted to go short up there. Plus, this first wave down from here to here, It went right to the fib target. This is our Elliott two-wave fib system. There wasn't that much weakness on the way down. And at that point of the day, you would have expected the trend to continue. So you get into that trade right here. Went up about 15, 20 pips, more than enough to move your stop to break even, or you might have made 5 or 10 pips on there. And so be it. Now notice on this explosive move down, minus 20 weakness. It hit the fib level here. On the way back up, it's a pretty decent trade because anytime you see plus or minus 20 readings right there, those trends usually continue. In this one, boy, did it continue. Fell about 75 pips. And you didn't know this was your profit target right here, the previous swing low plus the fib level, but it shot right through it. So then you look at this as your profit target, it shot right through there. This is your profit target, shot right through there. And anytime it's underneath the lower containment band, first sign of it going up, usually you want to get out of the trade. I would have probably exited here at 33. We would have been short somewhere around 07. It's about a 70 pip move. And again, notice the minus 20 weakness. So when it retraces back up at this resistance area right here, pretty decent place to go short. And when it comes down to the lower containment band, it doesn't have as much weakness. I would have got out somewhere around here. I would have obviously missed the other 25 pip move down. But you got to trade based on probabilities. Don't be greedy. That's the #1 rule of success. This currency has a weekly and monthly trend is down. So when it hits the upper containment band without that much strength, because the longer term trend's down, it's a pretty much no-brainer trade. I might have got out of this trade right here for 20 pips, came back up again, didn't have that much weakness again, or strength, go short again. The second trade, pulled back about 20, 25 pips. Again, this one's really not moving that much today, so take your 10 or 15 and be happy. This case, the weekly and monthly trend's down, so I wouldn't have really been looking to buy this breakout. I probably would not have bought that breakout, and I might have even went short right here because the momentum on the way up wasn't that much, and that trade really didn't work out. Probably would have lost 5 or 6 pips. When it went up to the trading zone, 10-day moving average here, again, not much strength, gone short again, and maybe I would have made 5 or 10 pips on that. You have a perfect Elliott two-wave pullback system right here. Notice it comes down to the 1.382 fib target. There's not a whole lot of weakness. The weekly trend had shifted up by that point, and on the way down there wasn't that much weakness. And fib levels, once broken, tend to become support. As you can see, pretty decent trade. You might have got out of that trade and had to re-enter. You might have made 5 or lost 5 or broke even on that because it went sideways for 40 minutes. Usually I don't hang on to those if they don't take off immediately. Once it started going back up, you got to get back in, and it went up about 20, 25 pips. New Zealand, major resistance here. Once it breaks above it, daily, weekly, monthly trends up. You get into the trade, and again, extreme strength by that pullback. You might have, had some small scalp trades on the way up. Euro yen was one of the best. Fib level, once broken, becomes support again. You might have got into a trade here, and it really didn't pan out. Once it breaks above here, this, I probably would have got out of half the trade here because it looked to be stalling. I trailed the second half and made a fortune on the second half. It went up about 100 pips more. So sometimes you only make 20 pips on your first half, but 80 to 100 on the second half. This time, let's just assume we made about 100. So 20 plus 100 is 120. Divided by 2, we netted 60 pips on this trade. Half the time, the second half of your trade, you're going to make less, and the other half of the time, you're going to make more. Usually only 10 or 20 pips more, not 100 pips more, or 80 pips more, but these explosive trends occasionally happen. This currency had a daily, weekly, monthly trend was up. It broke underneath the hourly, came back above the hourly. You might have bought this breakout here. It didn't really lead to anything. There wasn't a whole lot of momentum there. The pound wasn't nearly as strong as the yen or the euro, so you would have been focusing on the euro yen, obviously. Once currencies break above the hourly and come back and touch it, especially if the longer term trend's up, this is a pretty decent buy. Did go up about 35 pips, and again, found support here. It went up, but we would have been focusing on the euro yen. We're running out of our 15-minute time limit for YouTube. Our fib target level up here was a great place to exit your trade. And again, notice the plus 20 strength right here. After the pullback, you get in, went up another 20 pips. Fib target, our fib retracement level was the low today in this one. And the longer term trend's up, so I'm a little hesitant in selling these, but if you would have went short here, you probably would have lost the first time, got in again the second time, got that loss back. Notice the hourly moving average when it comes up to it and can't get above it, great place to go short, and this one fell about 60 pips. And look at the minus 20 weakness, you sell the next pullback up, and that one maybe led to a 5 or 10 pip move. The longer term trend is up, so you got to be really careful selling those.